markets have rebounded in the past week after going to a low. They have been rebounded primarily on account of the statements made by China. China has been talking about taking a calm approach towards the trade barriers and also looking at holding the tariff retaliations for now. So that's given a positive signal to global markets. US has bounced back. It is recovered from the lows. It's gained for the last week. Europe has also gained, while Asia has been relatively negative, but it is recouped from its lows and bounced back. The Indian markets have also been bounced back from their lows, primarily on account of the news and the initiatives that the FM has taken in the last week. These are primarily related to the slowing economy and the concerns that have been happening in the Indian market. So they have introduced some of the measures such as 70,000 crores of recapitalization with the PSU banks, removing the surcharge on FPIs, which was a big bone for the markets to on the upside. So FPI issues are out of the way, as well as there have been noise about consistent measures that will be taken by the Indian government. So that's given a positive move for the Indian markets. It has significantly moved up from its 6-month low. The low that the Indian markets hit last week was 10,637. It touched the high of about 11,141 odd levels and closed the week at about 11,023 odd levels, up by about 1.79%. All the indices were up. Primarily, realty was up by 9.26%, FMCG was up by about 3.54%, and pharma was up by about 3.75%. In the coming week, we expect the market to be sideways, but with some amount of volatility. The FM has come back again today with some measures, big bold measures in terms of the PSU bank mergers, bringing it down from 27 banks to about 12 PSU banks, and that would lead the growth from a long-term reform perspective. However, the GDP data that has come just now is negative. It has gone to a 6-year low of about 5%. So that's a bit of a concern. Overall, the slowdown concerns are there in the Indian as well as global markets, and we do expect some amount of stimulus that could happen in India, but it could be a staggered approach from the government side. So the upside looks capped. We would request you to look at your stocks with focus on fundamentally strong stocks and focus on your stop losses while the markets are in the sideways correction. So that's our outlook for the week. In terms of stock recommendation, we have a buy on Nestle. Nestle has a target of about 14,205. This signals an upside of about 12.1% in the coming 12 months. We have a stop loss at about 11,811 odd levels. So that's the approach or outlook on Nestle. Primarily, this has been on account of strong Q1 results. Both revenue and profit have been up by about 11%. The strong parentage and strong R&D gives a positive fillip to this stock in the current market conditions. They have a good execution strategy of twin brands. A twin product strategy in terms of Munch and Kit Kat owning about 63% of market share. Innovative launches have been quite a thing at Nestle. The management is quite resilient in terms of their valuation. It's running at a 66p versus a market P of about 58x. So reasonably valued, and there's consistent growth that is expected. Nestle is also slated to get into Nifty 50 from September. So that's again a positive. So that's our outlook. Thank you.